Welcome to the Weekly Spark, your fast 5-minute flash of insight into the world of mortgage and real estate. Every week, we're here to ignite your understanding of the market, from mortgage rates and housing trends to legislative updates and insider strategies. So let's strike the match and spark your week. This is the Weekly Spark.
It's Halloween. Jason brought his hot dog costume. I brought a scary headache, so I'm just going to try to muster up the energy to get through this episode.
Don't be a wiener, Ryan.
All right, so many puns, so little time. Just Jason over
here.
Let
me take this off. Maybe they may not take me seriously if I keep that on my head, so I'll take that off.
All good. All right, so let's jump into it, Jason. Obviously, FOMC week. Scary comments coming from the feds. What do you got?
Yeah, so listen, the rate cuts are in, and as we expected, they cut another 25 basis points. But more importantly, what we were looking at was the kind of sentiment that the Fed was going to give after those cuts. So I personally watched Jerome Powell's comments, and what we're looking for is either a dovish or hawkish sentiment. And really what that means is, so when the Feds have hawkish sentiment, they're focusing on controlling inflation as the primary goal of monetary policy. Rates stay higher. Dovish policies, they're more concerned with promoting economic growth and job creation. And the Feds basically manipulate interest rates to achieve whatever policy goals they want. So real quick, if they keep rates elevated or they don't cut them or increase them, things just become more expensive. So it lowers inflation, but it also chokeholds the economy, so to speak, and it slows down. Because if things are expensive to buy, people buy less of it. And if they make it inexpensive and lower rates, that would be considered dovish. People's payments are lower and they tend to buy more. They go get that car they wanted. They upgrade their appliances. So it helps with job growth because money's cheaper. Companies also borrow more and they have more on the balance sheet. So bottom line, going into today, there was an 80% chance the Feds would cut rates again in December. However, the wiener, Jerome Powell, had some hawkish statements to say, stating that a December rate cut is not a foregone conclusion. He's concerned that if he cuts, he sees inflation may rise, but if they don't cut, job growth will slow down. So we'll have to see how things shake out. The Fed is not on the same page with each other, Ryan.
Yeah, it sounds like a fancy word for stagflation there. Lots of comments leading to that possibility. So we'll see how that shakes out. Haunted housing, are ghouls and gals buying right now?
Yeah, so listen, realtors and my mortgage friends out there, we've kind of seen a lull in this market for quite some time, right? The good news is we are seeing an uptick in purchase applications. So year over year, they're up 17%. Not as good as refinance applications. They're up 61% year over year, but we're seeing a nice trend. And if we have some time, Ryan, we could jump into the charts, but I would say for realtors, let's be ready for an influx of business. Educate your buyers on this lower rate environment and get with a knowledgeable lender that can help them through this process.
Yeah, let's go ahead and take a look at the charts. Get a little time there. So let's go ahead and do that.
Cool. Okay, awesome. So again, guys, we want bonds to rise and we want the 10-year inversely to go down if we want favorable interest rates. Right now, as our system says, we're in a locking environment right now. And this is to be expected, right? Because back in September 12th, when they did their rate cut before, we did see a higher rate environment as bonds started to slow down. But as you can see, these moving averages have really held this together and we still have this uptrend. So the trend is our friend. So even though right now we're down about 23 basis points, we still have this 25-day moving average that we expect to kind of hold on here. And as long as it continues to run on this trend line, we should be okay. And then going to the 10-year, we did see a nice increase here, which is not good for rates. But again, the trend is our friend. We're seeing this hold and we're expecting to see this 25-day moving average hold. Overall, long term, I think we're in a really good environment, Ryan, to see rates continue to come down over the course of time.
Yeah, hopefully we can see a little decrease in that rate spread like we heard about this past weekend and really see some things kind of turn into to what they should be. All right, and then let's cover our loan spotlight. So FHA loans have long been assumed that they are made for first-time home buyers. So tell us a little bit more about how they can be utilized for people that are not first-time home buyers.
Yeah, so certainly not the case. FHA has been a fantastic loan for buyers that just don't have perfect credit and not a lot of money down. So even in this environment with a 580 credit score, you can get into an FHA loan with as little as 3.5% down. We also have some down payment assistance programs for these borrowers. And we also have really rates that stay lower, even with lower credit scores. There's not a loan level price adjustment for that. So for folks that maybe not have that perfect credit and don't have that 20% down, fantastic loan to get into a house, especially with the rates as low as they are right now.
Yeah, it definitely opens up some opportunities for some people that maybe they did own a home and rolled out of it, even within the last 3 years, or if they're selling their home and buying a new one, they can still utilize an FHA loan. And I think that's something that's a big misconception across the industry. So glad we got to cover that a little bit. All right, that's all we got for today. So put your hot dog hat back on there, and we'll see you on the next one, Mr. Wiener.
Happy Halloween, everybody.
All right, bye.
That's a wrap for this week's edition of the Weekly Spark, brought to you by Creative First Mortgage. If you've got questions or want us to cover something next week, please let us know, shoot us a message, and until then, keep your deals moving and keep your week lit. See you next time.